Okay. And this is maybe probably a third high here. And then that was the fourth high here. That was the fourth high here. Let me just do this. Yeah. So all these points, the upper points, these red dots, that's where you sell. Because look at where they are. They are literally next to, they're literally, you know, reversing. They're actually reversing from they're actually rejecting sell price to say. So it rejected this 145, 443, 433, you know. This one it actually rejected the 16, the 636, and then this one it rejected the 146086, and it sold off. So this is where you sell. You sell at the where the price is reversing, and you buy where the price is actually reversing at the low price. You sell at the high price. You know. So am I making sense? Am I clear enough? Can you see this is an uptrend? So this is what I was talking about when I say this is the buy trade. You see it like this, where the highs and the lows are higher, and the lower are higher as well. We call them the higher lows. That the second low is previous is higher than the previous one, and the third low is is higher than the second and the first one. So that's how you spot the market going up. So please do make sure that you are actually giving yourself time to actually learn about this, how to connect this. Um, it's very much important because it will help you to not get confused on where to actually start trading, because you would look at the chart, and after looking at the chart, you would know the direction. And for you to keep that direction, you need to use these tools that I was using so that you can keep track of where you see the market is going, you know. So I hope I'm making sense, guys. Any questions so far? No questions. Okay. No, okay, no, that's nice. So anyone else with the question, maybe who can literally feel that they need to ask something. Okay, I believe that we are all on the same page. So let me just clarify maybe um the support and resistance. The support and resistance is actually where the price can go higher or where the price can go even lower. So it'll just reject from that. So that's what we spot as traders most of the time. We spot the support and resistance in most cases. I'm just looking for the sideway market. The side market. Um, Sideway market, the ranging market. So this market is just trending up, trending up. This one is choppy. Um, you can see. Let me just see here. Um, yeah, this market is trending. Oh, okay. You literally use this one here. me try to use this face here. Mm, we can use this, the range of market. So it's probably here, just there. You see. So I'm looking at my lows and the highs. No, that's what you should know as a trader. You look at your before anything else. Look at your direction of the market where it's currently is heading, and for you to actually get not 100% direction or set up, but then just to get the points. You can't always, you know, put the same levels, but as long as it's the same zone, then that is not a problem. No, probably here. So this is a ranging market here. It's a ranging market. This one here. It's ranging up and can you all see it? This. Yeah, so this is a ranging market. It goes up and down. No, it goes sideways actually. It doesn't go like the uptrend or the down doesn't go like this, you know. Oh, sorry. Come on, come on, come on. Okay, where are you? Where are you? Let me check. Where did I just analyze that one? Sorry about that, guys. Like, yo, using a cell phone sometimes is a problem, especially to analyze these things. Mm, okay. Yeah. Here we are. Here. Yeah. There. Okay. Right. I think it's a problem, yo. So here, been doing the same thing over and over again, yo. I don't know what's wrong with. Okay, so like here, so that is a ranging market. Not going, it's not trending up like here. It's not trading up like here. Mm, so it's not trading up like here. Like here. It's not trending up. So here it was just trending up until it got to where it started to range. Up until it got to where it started to range and it broke out of that range to sell. It sold off. And after selling off, that's where it started to change. Um, as you apologies, man. I'm having problems with this. Like, are you guys seeing the picture though? Yes. So basically, the rental market is not trending up or down. It's actually trading in a sideway, but then within that sideway movement, there's up, down. So it actually tells you that where 124, you buy at 124 and you sell at 126. So I would say at this first 2 points on your left, um, the first point you would buy, it goes to 126 and comes back to 124. So when it gets to 126, then you say take profit, and then you say sell. It will sell back to where you bought, just like that. But then remember, this doesn't happen. It doesn't happen forever. Like it literally gets out of that ranging shape because it's not moving that much, and it starts doing what it start to break out. To call it a breakout strategy. We call it a breakout strategy, something like um just wanna see if ever I can show you guys. So a breakout strategy is when just wanna get a drawing. Yeah, fail to get it is fine. Um okay, but then I hope you guys understood what I hope you guys understood the chat session. I just want to show you guys the breaker strategy. In most cases, it does. So in most cases, the breaker strategy will be like this. This is ranging like that. So on the maybe the third touch, it will just break out. And when it break out, it will come back to form a support and it will just shoot up. So this is a resistance and this is a support. So support is like I said, when the price can't break lower, and the resistance is where the price can't break higher. But then eventually it happens, it breaks due to the momentum. Maybe there are more buyers or more sellers. When it breaks to the upside like this, it's a buying market. Now the market is being taken over by buyers. Remember, when you buy, you expect the price to go up from where you bought. And when you sell, you expect the price to go down from where you sold. So with the selling market, it will be like this, something like this, whereby it will just do this on the third touch, it will break. After breaking, it will come and retest. We call this a retest. When the market comes back to where it broke, it actually it signals us as a retest. It's retesting the price that level that it couldn't break before, to show that now we are no longer coming back to, maybe let's say that price was 10 rand, we're no longer coming back to 10 rand, we're moving down to 8.7. So we call it a retest. Please do read about this on your PDF, and please don't be hesitant to ask me questions. Utilize me as much as you can to get the best information and to get the best teaching that you would ever find. But then so far, I believe we're in the same page. We can now spot an uptrend or downtrend. Can we? Uh, can you guys hear me? So when it's high, we sell or buy. I see a question from Lungi. Okay, so like when it's high, when the price is high, when the market is at a high price, you should expect for selling, because when you buy at the low price, right? Little bit confused. Highs with highs and lows. Um, Money, I'm recording the screen here. Please go back. I'm gonna share you guys a Google Drive. What is the? I'm gonna share a Google Drive link where you can just check it out. But then it's not so much of confusing. It's a matter of having to understand your high as a candlestick and the low as a candlestick. From that body candlestick, that high and the low. Remember, in the forex market, you don't trade one candlestick, right? We don't trade this candle. We don't trade this. We don't trade this only. We trade multiples of this, maybe hundreds or 20 or 50, because it gives us a pattern. It gives us a pattern. We trade this. We trade patterns, you know. We trade patterns. We know this is going up. We know this is going up, this is going up. We don't trade one candlestick like this alone. You wouldn't know what's happening with the previous ones. So you should know about your previous data and then your present data, and then the future data. So that's how you actually analyze. You look at the past tense, what happened on the other data, and then what's happening now, the recent, and then future, what is likely to happen. For an example, I can just give you guys some quick analysis, and and we'll check how how it's gonna perform. No? I'm left with 10 minutes. I'm just gonna give you guys a quick analysis, and then we're gonna check how it performs. So let me this real quick. Okay, so here now we on Euro JPY. Okay, so Euro JPY already we're in a downtrend, right? Euro JPY already we're in a downtrend. The market is dropping. Let me just clear this result. So Euro JPY we are already in a downtrend. Why am I saying we're in a downtrend? Because we broke out of the uptrend. We broke out of this uptrend. If we can if those can remember, they can still remember the highs and the lows that I was speaking about. Look at where this trend line I'm putting these lines. I'm putting exactly right on the lows of the previous data. This is the previous data, by the way. This is the previous data. So um, I'm putting this on the previous data. You know, so I just wanna get but then let me see. Let me just do this. Yeah, it's fine. No? So previously was an uptrend. So what happened is that higher high. What happened is that we're seeing series of higher highs and higher lows at the bottom of the lower trend line. These are the higher lows. But then with these higher lows, it didn't here. If you can check here, so if you can check here, here we are supposed to get another lower high, higher low. Sorry, we are supposed to get a lower high, a higher low that goes higher to create a higher high. But unfortunately, the market did what? It didn't do as how we see it should do. What it did, it actually broke out of here. It broke out of, it didn't respect this support level. The support level, remember, the price shouldn't break, it should just respect, shouldn't, it should bounce from it. But then here, we can check it didn't broke with this red candlestick here. This, this was the break. This was the break of the uptrend. It created a lower, this is a lower low. And this was a what? An H L, a higher low. So it could have respected, it could have done what it could have kept the series of higher highs and lower highs, right? It could have done that, but then it did not do that because we had more sellers than buyers. That's what happened. So what happened? Remember, when the price break like this, it needs to do what? It needs to come back and retest that price. That point it broke. So we're seeing that the price it broke and it retested the price it broke, and what it did, it fell. It fell, right? It fell. So this confirms to us it is what? It is a selling market. As you can see, within this uptrend, we have lower lows. Let me just point them out real quick. We have lower lows, just to point them out. Sorry. Lower low, lower low, lower low, lower low. LH, lower high. This is the lower high. LH, lower high, Look at that series, lower high, right? And here it wanted to, by Ziza asked to say it's going up to create a higher high, but then the sellers were too much. The sellers were too much to say no. We're gonna do a fake out. We call this a fake out. We're gonna do a fake out to show buyers to say no, we are now buying. But then in the actual sense, we are coming down. So what it did, it actually dropped to create a break here. After creating that break, it now created a lower high again. Now we are at the lower low point. We are expecting the price to do what? Maybe it can literally do what? It can literally see let me see before this thing shuts me out. Let me see before this thing shuts me out. Okay, so so usually when we analyze, we start from daily. So these are time frames. H1, M5, 15 minutes. Every 15 minutes, every D1, every daily, there's a candlestick coming out. So now I'm at a chart called day one of Euro JPY. It means every day there's a candlestick. After 24 hours, there's one candlestick coming out to represent what that one day. So here we are literally looking at the month, you know. So so here what I need to do, I check now to see where is this price at now, because now I could see it's actually a downtrend. Yes, I can agree it's a downtrend. And what I need to do, I'm looking at my levels, because I could see here it's a level. I could see it's a level there, and now it's actually on that level. So what might happen is to see the price doing what? Is to see the price. It's either the price can literally drop from there to go to the nearest low. The nearest low is somewhere here. This is the nearest low, the nearest lower price. So it can literally drop from there to actually come here. So to understand it better, to see it how it does, we're looking at the candlestick patterns. These, we call them candlestick patterns. We're looking at the candlestick patterns. What is it signaling us? Are we going down, or are we literally reversing from the downtrend and starting to take the uptrend? And now, as we can see, we are seeing the price is being consolidating. These three candlesticks, they show a movement of consolidation. They're not moving up. They're not showing higher highs. They're not showing lower lows. They're not showing lower lows. And they're not showing a direction of the uptrend or downtrend. It's just going a sideways movement. And this part is the critical part, because at any time anything can happen. As long as we can see a price breaking the level of 138, if it can break this price of 138, it can go beyond 138. We can now say the price is going, the Euro JPY is buying. But then if it can break this price of 137,893, we can fully say now the market is selling. You know, so that's how you get to analyze the market. You just don't buy and sell at the same time. No, you get to realize your trend. You know, you get to realize your trend. You get to realize where is the market at. You know, like with this Euro JPY, we can see the market is at its lower, is at the support level. The price previously it rejected here. Previously it did reject here. Sorry, the price reject previously it rejected here. Now it's where it previously rejected. You know, so like this. So basically, you can see there's high possibilities that the market can literally go up. Can literally high possibilities, because previously history tells us that at this level of 138, 133, there is a reversal. What happened here? When was it? The reversal happened on the probably 2022 9 October on the 28th. That's where the rejection was happening between 28 27. That's where the market was reversing going up. So there's high chances now, January 3 or January 4, the market can literally go back up again, or rather, it will continue going down. So with that, we are only waiting for the levels that I spoke, I mentioned to say maybe that those levels, if we can break above the 138 or maybe the 136, 37, then we can say the price is going up or is going down. But then what's more important to know? Oh, damn it.